Good afternoon, this is Nick Inman from VolumeProfileTrader.com on Sunday, March 18th, and the S&P 500, the market continues to make new highs. This is good news, 1400 on the S&P futures, on the actual SPX, 1405.88, so pretty impressive. Looks like the market wants to continue its upward drift. However, there's definitely some levels that we need to talk about just so you know what's going on and what I'm looking at. So I'm going to bring this chart over. Remember, this is a 90-day. Right now this is a 2-hour chart. And what we're looking at here is for the last 90 days we've gotten a point of control shift from the 1255 area or so, which was this original breakout to the upside. And now we have it up towards 1366. And so I'd say go ahead and write that number down, because what I'm saying is, especially for the month of March, if we have any pullback, 1365 or so is the maximum you want to see this market go down. If we go below that, then you really have to look at some type of blow off top and potential downside. But to go on, February's point of control, this 1340 level, is really, that would be your ultimate buying area. That's where you would want to be a buyer. So anywhere towards 1340, if we get some type of real pullback, that's where you want to look to be buying. But on any, semi pullback down to 1370, 1365, if you don't, you're looking for a bounce there, you probably get a bounce there. But if you don't, you need to be aware of that, and you need to be looking to take profits very quickly. I know that really a lot of my trades have gone from owning shares, and now if I want to make a bullish bet, it's through a call spread or something like that. And so I'm managing risk, knowing the maximum amount I'm going to lose, even though I don't plan to lose the maximum amount on any given spread. It's just it's risk management. So overall, market looks good. S&P looks good. Remember, 1365, 1370. That's the area that you want to focus on. All right. Let's just go to what's working. Bank of America is working. You look at $8.09. That's the year's point of control. We had a long, month and a half sideways consolidation at these levels, and now you can see the power of point of control. Here it is forming definitely the biggest volume level. From there it's 1817, so really that level in general. And from there it's down towards $6. And from the $6 level we've had a nice bounce. And it looks like this is continuing. I'd say your next stop, $10, because it's psychological, which is only 20 cents away, but it looks like $11 and then $12.30 or so. So really there's a lot of upside left in Bank of America. If you're not already long Bank of America, don't buy now. Wait for the pullback. This is up from, let's see, the 12th of March, which was Monday, this past Monday. We've gone from $8 to $9.80. And, just to say the percentage move on that is a whopping almost 23%. So this has been an awesome move. The options, if for example, if you've been long April call options, you've been rolling in dough all week, and it's definitely been the best trade. And unfortunately I missed it, but you can see how it's set up. So in future trade setups, you know what you're looking for, and you know what to expect. Expect the expected. We got a breakout, nice move to the upside. Kodiak Gas. Now I'm still long this name. I've been long since, I'll tell you the exact date, the 8th of February. And what I'm looking for is a continuation from this balance range that we've seen from, call it $10.50 down to $9. And I'm looking for a continuation to the upside. I don't know if it's going to happen right here, right now, but we've seen nice buying volume. Really every single up day has been nice volume, and the down days have been pretty light to average volume. So that's just something to be aware of. looking for more upside. If you want to know what I'm doing, I'm long a 10 by 12 and a half. That's the setup, 10 by 12 and a half call spread. Not one, more than one, but yeah, that's the setup. And I'm defining my risk and I'm letting the position work. It expires this summer. Amazon, I actually really like this for maybe even an investment. And what I mean by that is just kind of buying it, setting it, and forgetting it. Maybe buying the 185 calls by perhaps, going out to the summer months, seeing what maybe the 220 calls are selling for, and if the spread makes sense, going for it, because I do think the path of least resistance for Amazon right here, right now, is to the upside. Could be wrong, but you're going. What I like about this potential is obviously point of control is at the bottom end of the range, and you've had a nice base building for the last 3 or 4 months, and all you need to see now is some buying to support the thesis, and you have a great trade to the upside. And 195, that's your first target to the upside. It's these recent swing highs and a 200-day moving average, just something to be aware of. But given the amount of volume down here, I wouldn't be surprised to see a move up to 215 or so. Broadcom up a little bit on Friday, up at the top end of the range. I'm still looking for this thing to break out to the upside, and you just want to kind of let it work for you. I'd love to build this position more on weakness, but we're not getting that. I own a decent sized position. I think it's 2/3 of an actual full size position. Only the shares, because the options weren't liquid enough for me, but I do like the position. I think it's going to be a long term winner. Win a little bit of resistance at this 200-day, at this 130 level or so. Let this work for you. You got 50-day moving average moving up. You got the whole moving average, this blue line moving up. That's good news. 119, that's your support level. For the month of March, you have 123. I'll show you. 123.60 or so. That's your point of control. Maybe looking for a bounce at those levels and then a move higher. Something along those lines. But I have actually a decent sized position in this, and I like it. So I think it's right to stay long, stay strong. Las Vegas Sands. Now, potentially speaking, this could be a double top. Come back down to the bottom end of the range, which has been, call it $53 or so, and we could trade in a $5, $6 range for the next 2 months. It's possible because we've seen a nice pop to the upside. However, as time moves on, and let's say for example we get a pullback down to the middle of the range, this 50-day moving average is going to be moving up. That's going to entice buyers to look to be buying off the 50-day moving average. People, for example, who run screens saying within 2% of the 50-day moving average, if this pops up on their radar, what they're going to see is a stock that's breaking out, pulling back down to the 50, back down to support, and they're going to be looking for more upside, and they're going to be buying it. So just be aware of that, and be involved, because I know I am. Walter Energy up another 1.5%. This looks good, continues to look good. I got involved on the 15th, 62.5 by 67.5 call spread. Just really looking for a bounce. This is a volatile name and it'll move quick, but you can see every rally has come up to at least $75. So I would be looking for that. But what I'm doing, just in case if it doesn't, just in case it's a lower high, I went to 67.5, which was the top of this most recent range, and I paid $1 for a $5 spread or something like that. So I like the risk reward, and I do think there's a high likelihood that's going to work out. And this position expires in April. Chesapeake Energy, stay long, stay strong. I have bought some more calls earlier this week that expire in the summer. I'm short some 26s against my long shares, but I do still like this position for a longer term move to the upside. I wouldn't be surprised to see the mid-30s again, in the next year. And, you can trade around that position, but stay long is basically the point. Devon Energy, nice volume the last couple of days. What we've seen is a breakout. We basically had this triangle pattern. It pinched. We got a breakout to the upside, and it's just slowly been pulling back. Pull back not to the breakout, but you could say to these most recent highs. Really, I like the fact that the whole moving average is moving up, 50 days moving up. I don't think this is a bad opportunity. A stop right below $70, about almost $4 of risk, a decent amount of risk, which you have to be aware of. But you could also look for a target up towards the low 80s. And I'm playing this. I've been long for a while actually. The 75 by 80 call spread for I think $1.25 is what I paid, expiring in April. All right, Schlumberger. Really oil, OIH in general. I think this is working, and I think it's something that you want to be a part of. You look at Schlumberger, bouncing off the point of control for the year, good volume. What we've seen here is kind of a mini breakout off of this consolidation range that we've seen. I'd be buying right here, right now, scaling in, buying a third of a position at a time, looking to get involved. And maybe you want to buy half a position right now because $76.76. You may get an opportunity to buy lower than that, but without a doubt, you keep your stop below these most recent swing lows, and it would be somewhere around 72.5. So similar to Devon, you have a decent amount of risk, but at the same time, the upside reward, I'd say $95, $100, and obviously your first target, you have a little bit of volume up towards 85, but I really would be looking for triple digits on this. Deere, it kind of looks like Schlumberger, nice volume. It's the same situation. You put a stop right below the most recent lows, around 78.5, and you see where it takes you, but I wouldn't be surprised to see triple digits on Deere. Just look at Caterpillar. It's pressing up towards the highs. This is at a 52-week high, where Deere is a little bit lagging, but the situation's similar, and I like Deere for a continuation to the upside. CSX, maybe something you want to do on CSX is sell the 22 puts, and what that would do is, if you don't have experience doing this, then don't do it and just buy the shares. But the 22 puts, what it'll do is, if CSX is under 22 by April expiration, you're going to be forced to buy CSX at $22. But you collect a little bit of premium in doing so, and I have no idea what the premium is. And I'll actually pull it up just so you can't see. Alright, so it looks like you don't have 22 as an option. You have to go with 22.5 or 20. Now 22.5, you have 25 cents. So if CSX is at below 22.5 in 33 days, you're going to have to buy it for $22.50, but you collect 87 cents for doing so. 87 cents on a $22 stock is almost 4%, so it's not bad. And the goal, in my opinion, is to put the stock and collect the premium without giving much downside risk. Without a doubt, I would think that CSX does go higher just because you've seen this monster volume the last 2 days. Probably some short covering, probably some longs trying to get longer, or people just buying in general. I mean, look at the move it had and the volume it was on, and then we had a follow-through day. Don't buy all at once, but buy a fourth of a position. And I'm sure, in reality, if you look at CSX, and let me get rid of all these drawings. It's really just been in a range, and we're at the top end of the range, the bottom end of the range, call it $20. That's where you want to be buying, but at the same time, on this monster volume, we may not get a test of this bottom of the range, and you want to be involved. And these prices, if you buy a fourth now, you'll find yourself buying a fourth, perhaps another fourth in a week or so, and eventually you'll have a nice little position, and you'd be looking for the high 20s on CSX. basically a retest of this range up here, and you'd be looking for somewhere in the middle to start scaling out, $26 or so. Not a bad trade, especially if you want to do like a covered call position or something along those lines. Kansas City Southern, 52-week high. I don't think this is the high on this. I don't think it's going to top out at $74.98. So similar to CSX, I'd be looking to scale in. I'd be looking to scale in now. And on any pullback down towards 70, you want to be looking to buy more. Freeport continues to trade along these lows. Want to start seeing some sort of support and a move higher above $40. If we can get that, I'll probably get pretty bullish on this name, but at the same time, you have a lot of regret, and you know there's people who want their money back, but we have point of control at this $40 range. So what we're definitely going to see is some sort of move, and it's going to happen, you know, within the next month or so. Concho Resources kind of looks like Schlumberger, kind of looks like Deere. What you're seeing is a bounce off the point of control and $100 psychological level, something to be aware of. I think this is a right here, right now, and I think it's something that you can be looking to buy. And you know, you can almost buy it aggressively, and your stop would be below these recent swing lows, 97.5 or so. You know, if you get stopped out, you get stopped out. You lose a little bit of money and you move on. That's trading, but you're going against the point of control for the year. It's definitely in an uptrend still. You know, we've gone from 63 to 116, and I'm sure if you do some crazy Fibonacci retracement, it's on some magical number, 38.2 almost. So, you know, it's a good pullback back down to the range where, you know, the lows of 2012. So just something to be aware of, and I think it's a good trading opportunity. Now gold, be careful, but it looks like we're getting a short-term bounce. I'd be looking for a bounce up towards 1700 or so. I'd be playing this, I think I already said this in another video, but the GLD, I'd be looking at call spreads that expire in April, maybe the 161s by 165s, 162 by 165, something like that. Give you a little upside leverage, and you know, realize that you're not being greedy by capping your gains. Crude, nice bounce on Friday, but it was on really light volume. Something to be aware of. Your low of Thursday, 103.78, just a level to be aware of. However, this is in consolidation, and you realize, you know, what do we get on oil? We have a period, you know, a short period of trending, long period of consolidation. Trend, well, this was a little bit of retracement, but messy. Trend, consolidation, trend, consolidation, trend. What I'm looking for really is trend, consolidation, and then a continuation to the upside. Now, with that said, I wouldn't be surprised if, you know, governments step in and try to kill this oil rally and try to move it back down towards 100. So just something to be aware of. The dollar, more pressure on Friday as it was on Thursday. What you're seeing here, and I'm going to bring up the monthlies, you have January's value area high, this purple line, 81.16. Guess what the high was on Thursday or Wednesday? Looks like it was Thursday. Oh, 81.16. What a surprise. Watch these current levels. Looks like we'll probably get a bounce. But the dollar looks a little toppy here, perhaps. But at the same time, you do have this 200-day moving up. So you do have, you know, longer-term trend starting to poke higher. Maybe the most appropriate chart would go out a year or so, and you can see, you know, really what we've been in is one big sideways consolidation with one poke up, which was a complete failure. And you can see, you know, we went as high as 89, came straight back down to 80, had a little pop, and then a flush back down to the bottom end of the range. What you're going to want to see for the dollar is, if you want the dollar to go lower, that is, is, to stay below basically the 2012 highs. And if we do that, then it's okay. We'll probably see the dollar push back down towards the mid 70s. If not, if this dollar gets above 82.25 or so, we'll probably see 89.90 again on the dollar. The euro, just looking at this 3-year chart, we're at the value area low. Probably an opportunistic time to be a buyer of the euro. Looking at it just here, value area low, has it been right or wrong to be a buyer on any consolidation at these lows? Back in, looks like, 2010, whenever it was, yes. Sorry. Let me zoom back out. Let me fix this. Okay. Here, was it? No. And the reason why is because you had it didn't stop. There was no consolidation. Here, it came up, and sure, it was actually profitable for a couple days, but there was no real consolidation where it stopped and, tried to balance. Now, if you look at down here, and I'm going to zoom in so you can see it better. Sure, we balanced here, and then you had a nice set of up days. If you're not long here, you're late to the punch, and you had a nice move to the upside. Just like here, you had about a month's worth of consolidation, and then a move higher. Here, you had a bounce and a move higher. Here, you had a little bit of consolidation. You could have taken this trade to the long side, but you would have gotten stopped out. That's fine. That's trading. What have we gotten since then? Basically, a move lower and then a rejection. We've held this 130 level or so since. I think this could be a long right here, right now in the euro for a test up to about 135 or so. That's actually a pretty good trade, which means you'd be looking to sell dollars, which means risk probably stays to the upside. See a annual chart of the euro, looks pretty good, and so overall, there's some opportunities out there. I think we pointed out some good ones today. Just be aware of that, and try to manage your risk. And if managing your risk means buying option spreads, buying options, buying shares with a tight stop, just know where your risk is and make sure that's not an arbitrary number. Look for places where buyers have stopped the selling demand, and that's where you want to keep your stop. And the way you buy your position is by the amount of dollars you're willing to risk, not by how big you want the position. Because what if the position doesn't work and you end up losing a lot of money because you thought it was just going to keep going higher? So be aware of that. Be disciplined, but be aware of the opportunities. So take care. Have a good rest of your weekend. Talk to you tomorrow.